Happy Friday, traders. It's 8:02 a.m. on Friday, the 12th of June, 2020. Hopefully, you can hear me loud and clear. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, this is episode number 1775. It is finally Friday. It's been a very, very busy week this week. A pretty intense week, actually. Lots going on in the markets and in life in general. Uh, this morning, the based on yesterday's just really large drop, if you include the gap, really ridiculously large drop uh, for a corrective action. Um, this morning, we actually have a pop higher with the Russell pushing up 3.44% from yesterday's settlement. 3.44%. Trading up 1,400 and a half and up 46.8 points. That's really big for the Russell. The Dow Jones is up 568 for the bounce, to up 2.3%. The S&P is up to 3060.50, up 61 points or 2.03%. So allocation clearly to safety this morning. To risk this morning as we push back into that all important low volume node on the composite at 3077.50, which was on the low range, which was the lower bound of yesterday's balance. And I'll talk about that in a minute. The 77 to 116 break out of there is likely to be a push. And as I said yesterday, the movement is likely to be aggressive yesterday. And it was. And on top of that, we layer the rollover, the official rollover to September, the U0 or U20 contract in the US indices kind of complicated things because we can't see what Delta is doing during this period. So yesterday kind of presented a mishmash of stuff that is less than ideal and made it hard to actually read the market properly. So big day, but hopefully you took advantage of it. Hopefully you didn't get hurt. That's the most important thing. But overall, not a huge fan of that kind of day. The bonds are off a handle and 7 ticks this morning. The U.S. bonds, the Japanese yen is off 0.58% on the futures. The 10-year notes are off 10.5 ticks. And if you're trading the pound and the euro in the futures, you should be rolling today. Today, you should be trading September in the British pound and the euro FX, the 6C and 6B contracts. In terms of the news events, really, there are a couple of pieces there, but overall it says the stock index futures rose, recouping some losses after shares fell in the previous session on fears of resurgence in coronavirus infections and economic worries. So there's a general kind of jittery sense in the markets and everywhere that we may see a resurgence. Some of you might have seen the footage in Las Vegas with these casinos opening and people kind of moving in and nobody's wearing masks and so on. I don't know what the right answer is, but the market is basically saying, look, people are so fed up of being locked up for the last 3 months, and they're coming out with a vengeance. Not to mention the protests, and now people are just crowding into swimming pools and so forth. Why am I talking about this? This has a knock-on effect that could lead us back, could not will, but could lead us back to the same kind of measures that have set us off in the first place. Hopefully not, and that's basically what the market is kind of looking at. It's looking at, hey, maybe we don't get out of this, maybe we don't move into these higher phases where we have a full economy and we're back in business and people get back to work. We still have a ton of people out of business, 40 million or so, 48 million. So it is what what we've got. The U.S. crossed, I think, 125,000 dead and 2 million infected. And so it's not just your seasonal flu. These numbers are pretty big, for especially for a short period of time. I mean, we're talking about 125,000 dead in a matter of about 10 weeks. That's I would call that unusual. Anyway, I'm not going to editorialize here. I'm just simply talking about what the market is seeing, and we're getting a bounce today. We are in range in the S&P 500. In the S&P 500, and we are trading in yesterday's massive trend range, and today's likely to be quite interesting. It's likely to be interesting. So we'll see what happens here. As far as the calendar is concerned, Great Britain got the balance of trade numbers. Came in a lot stronger, a surplus of 0.31 billion expected, a draw or a deficit of 6.2 billion. And then other than that, U.S. import prices came out, export prices came out. We're looking for Fed's barking at 10 Eastern. We're looking for a key number here, 10 Eastern as well. The Michigan sentiment, the prelim for June, the expectation is 71, and that comes out at 10. So at 10, be sure you have some distance to your entry or some sort of a physical stop in there, as this can be a mover. So other than that, Baker Hughes rig count at 1, and that wraps up the week. Next week is, let's see. Yeah, next week is a regular week. So that's where we stand. Let's take a look. Yesterday, I did not spend a lot of time talking about, creating scenarios and so on, because there was just a very, very large gap down. We moved from like 31.75 and we were trading at 31.05. So already we covered about 70 points in the overnight range in terms of where we were opening. What was important yesterday is what I outlined right here, and that is we were opening on a high volume node, which consists of these 2 days. This is such almost a too perfect structural setup as we push through an existing gap. We push through an existing gap and we open up right on top of balance. And what this does is it kind of adds fuel to the fire. And that's why I was saying that it's likely to open up. And let me change the color here because I'm like drawing on top of, orange on top of orange, yellow on top of yellow. So let's just do this. So the expectation was we open on top of balance. We are likely to shuffle around and then either rip up in a responsive buying spree or rip down in selling. And the numbers to watch were 116 and 77. A break below 77 likely to go with it. A break above 116 is likely to show us 3170 to 3175. That was what was expected yesterday. I didn't draw the scenarios on here because it wouldn't have been very fruitful. Here's what actually happened. I'm not even going to bother with the trigger chart because the range was too big. So here's what we have. I'm going to draw it on here. We expected. We know there's a high volume node here. We know that these 2 days represent some pretty tight balance before the gap up, and we are opening on top of that balance. Look at us. We open at 3,175. The point of control is at 30.9950. Very, very sweet. We pushed up and down. We have a two-way auction, and then we start to move lower, and then we take out this 30.77 right here, and then we pull back right to it, right there. See this little nubbin right here, this little wick? We pull back and off to the races we go. Where do we go? we go down to the next high volume node. This is how volume profile really kind of shows its muscles. Um, we move down to the next high volume node, and you can see it pushes through, traps a little bit, consolidates, and then pushes right through and moves to the next to the next high volume node at 3,000. Moves to the next high volume node, and that's where it ends up resting. We finish the day at 3,000 and a quarter on the close. Just beautifully, in the big picture, beautifully structured trading. And the market basically had price discovery down that was worth almost 200 points from about 31.75, the prior close, down into the low of 29.85. So it's quite a day, very, very, very unusual, above 3 sigma range day on pretty decent volume. So we have this flush, which we had talked about earlier in the week. I'm not here to say I told you so and I predicted it, in the Monday morning quarterback fashion, or, hindsight 2020 fashion. But when we've had these up days where we had a neutral extreme high, and then the next day we come in and we take out the low. So one-time framing ends. We have one-time framing here. One-time framing ends, and then the next day comes in with a lower high, lower low, and the point of control shifts down. This shows that on this day we have a peak, and I talked about this earlier in the week. You're welcome to go to the YouTube channel, rewatch those trader bites. They're there for you. And the idea here is that this is looking kind of toppy. It's looking kind of weak, and we're watching Delta as we're doing that. The Delta has been weak on the pushes up, and so this whole balance range here becomes really, really important. Really, really important. You got to pay attention to where we are here. And this is not the all-time high or anything, but it's really important to consider that shorts are going to be watching this area very carefully for risk control. If we make it through this area, we're looking at new all-time highs. And so on the push higher, I expect that we are likely to have a pretty hard time getting through those areas up above. So yesterday was a bona fide, certified, genuine stamped trend day down. We broke the IB in one direction. We have multiple high volume nodes, so no balance at all. The market was in active price discovery, and most importantly, we finished with a point of control at the low. The expectation in the overnight session is that we are likely to take out that low at 85 and a quarter, and we didn't. We pushed to 91 and a quarter on the reopen, and then we're higher. We're pushing the overnight high, which is surprising. We did not bother to test below yesterday's low, and so what this could do is it could turn into a bit of a kind of a quick V bottom type of inter session V bottom kind of setup and squeezing the shorts that came on yesterday. Where we are is really important. The 3077 area, you can see it right here. 3077 brings us back into the balance range, and that's going to be the most important area to watch today. Is going to be this 3077 low volume node on the composite. This low from the 4th of June. This is an area that is, if not defended, if we push through, we are likely to squeeze to the other side. And by that, I mean 3116, and then start working on the gap higher. Okay. So that's where we stand today. We'll see what things look like. It's too bad. That rollover happens to be layered on top of the action here, because it obscures the true intention of volume, because rollover volume is in play. So that's where we stand there. This morning, Bookmap, it's a rough go, because even though, and I'm monitoring the volume here in my IQ feed watch, you could see that the June volume is at 596, which is really high for an overnight session. The June volume is a 596, and then the September volume is a 414,000. So as we start to move into the day session, the RTH session, we're likely to see an acceleration of volume coming into the September contract as June volume transfers, or the as June open interest, I should say, transfers into September, and it contributes to the volume for the day, and so we expect elevated volumes on rollover, and we're seeing that. But we also have action, market action that's also contributing to this. So it is likely that going forward from today on, trading the September contract is going to provide the liquidity and the logic, the auction logic that we need. Pay attention to this 3070 area. Come on, dude. This 3070 area has some liquidity, and then above, I'm paying particular attention to the low volume node in 3077. It's highlighted here with the stock zone. Unfortunately, because we're in this rollover, we don't see liquidity coming in here heavy. I could pull up the ESM0 contract, but as I said yesterday, I rolled to September yesterday, and that's what I'm quoting today, and that's what I'm looking at. So we're not seeing the order flow that we'd like to see. Order flow is difficult during a rollover and expiration week. Okay, so let's move on to what's expected for today. Having gotten the lay of the land, let's take a look at what we're expecting for today. So what are we looking for here? We're looking for the fact that the market pushed straight up. Let's bring on our stock zone levels. A lot of levels, a lot of structure in this area. So the area I'm paying attention to is right here. The expectation, well, let's step back for a moment. Let's step back to the review segment for a moment here. And let's not skip the overnight, because that's giving us a lot of detail. So the overnight session, we could see that immediately we could not take out that last low, even though we had a sharp point of control at the low of yesterday. The overnight session shows that it's holding VWAP and mid all the way up. This market is unrelenting with its buying right now. It's seeing a lot of value at these prices, and it's seeing that, well, it's seeing these prices as undervalued, and it sees value higher, and that's why we buy at lower prices, is because it's undervalued. And so what we have here is a weak high. So I expect and I anticipate this continuing to push higher, and I'm looking for what it does in that 3080, 3077 area. Given that despite this movement up, and it's unfortunate that we're missing this key piece of delta. You can see the delta is not really playing along, but, or sound like what's that guy, the advisor to the president? But. The delta here could be affected by roll. It could be just thin. It could be still trading in the June contract. It's hard to tell what the heck its intentions are here. And so what we see, all we go off of is the price structure. And what we see in the price structure is it's still weak. So as we come into the current, the expectations for today, we're looking for an open that is in range. Clearly, there's the structure up and down here is very, very thin, expecting it to continue higher. I'm looking for a test of the 77 to 80, and I'm looking for a response back, consolidate, move back to the overnight point of control, and hold steady in here. I'm expecting an inside day. I'm expecting buying to be exhausted early, sellers to step in, take it back to around the open for it to sit sideways on another summer Friday afternoon trade. That's what I'm looking for today. Given that we had a big selling day yesterday, and we see ourselves popping higher, we are likely to push that overnight high and then get a squeeze down to the overnight point of control and a push down immediately as those who wanted to drop, let go of their assets, find these prices higher, and so they find an opportunity to sell as a follow-on selling. But I'm going to tell you, this action here is very, very, very bizarre, uh, given that we had a big selling day yesterday. I mean, imagine overnight we exceeded the mid of the prior session. Normally we hang out, if anything, it'll bounce up and we'll hang out, potentially at the 30.25, 30.18, 30.20, and then we would test lower. Then we'll have a confident buying spree. But this market is just so on steroids in terms of buying and asset value inflation. It's really exceeded all that and took back basically what is 80 points of range overnight. 80 points of range overnight on what was there a war taking place and a truce was called? What's the bounce based on? Technically, those, and that doesn't matter. But to me, it says that they're looking for lower prices to buy. But as prices have pushed up, those who were nervous in the first place, those who still think the coronavirus, resurgence is ongoing, may see this as an opportunity to sell assets at better prices, and that's what scenario 2 is about. And I'm looking for it to come into this high volume node and just stick around here between 30, 36, and 30. 20, 30-20 is a big one. So, but still, the key is to see, does it hold the 30.77 or does it push through? If it pushes through, then we are likely back at 3,100 and we are likely to push 31.16. If scenario 1 doesn't find sellers. Okay, so it's a lot can happen here. There's a lot of action going on here, some decent volume. My advice to you is to just sit back, wait for the Michigan sentiment number to come out in the first half hour. Let the market decide which side has the bullets, has the firepower, and then look for pullbacks to trade from that direction. Okay. Remember, next week is rollover and expiration week, and it's quad witching Friday next Friday. So there's going to be a lot of gaming in the book and some anomalies in the futures as you trade over the next week. Just be prudent, be picky. Don't let them take your money easily if they're going to take it. Good luck.